Okay, let's continue to discuss MFRS 119 on employee benefit. Okay, here we discuss post-employment benefits. There are two types of post-employment benefits: defined contribution plans or DCP and defined benefit plan or DBP. Okay, in paragraph 50, accounting for defined contribution plan is straightforward because the reporting entity's obligation for each period is determined by the amounts to be contributed for that period. As I mentioned, example of DCP in Malaysia is contribution to EPF, Employee Provident Fund, or KWSP. So it is straightforward when company, let's say, need to contribute 12% to the EPF for each of employee. Consequently, no actuarial assumptions are required to measure the obligation or the expense, and there is no possibility of any actuarial gain or loss. Moreover, the obligations are measured on an undiscounted basis. Okay, this is not like DBP. Okay, as you can see in paragraph 5, accounting for DBP is complex or complicated because actuarial assumptions are required to measure the obligation and the expense, and there is a possibility of actuarial gains and losses. Moreover, the obligations are measured on a discounted basis. Can you see the difference here between DCP just now? For DCP, the obligations are measured on an undiscounted basis. However, for DBP, the obligations are measured on a discounted basis because they may be settled many years after the employees render the related service. Okay, let's start to discuss statement of financial position. Okay, this is in paragraph 63. Okay, what you need to do, you need to calculate defined benefit liability, or sometimes it will result to defined benefit asset. Okay, so when it results to defined benefit asset, as you can see in this paragraph 64, where entity has a surplus, okay, this defined benefit asset must be measured at the lower of A, the surplus in the defined benefit plan, or the asset shielding determined using the discount rate specified in paragraph 83. So this paragraph 64 is actually need to be referred to if and the calculation result to net defined benefit asset. Okay, what you will show in statement of P&L. Okay, it is being discussed here in paragraph 120. So item that will be shown in statement of P&L is called as defined benefit cost. So defined benefit cost, okay, shall be recognized, okay, except to the extent that another MFRS requires or permit their inclusion in the cost of an asset as follows. So in statement of profit or loss, okay, this net defined benefit cost consists of service cost. Okay, you can read the standard that this service cost consists of current service cost and past service cost. Number 2, net interest on the net defined benefit liability or asset in P&L, and C, remeasurement. Okay, so this remeasurement also will be shown in other comprehensive income. Okay, so remeasurement of the net defined benefit liability or asset recognized in OCI shall not be reclassified to P&L in a subsequent period. However, the entity may transfer those amounts recognized in the OCI within equity.